Welcome traders to today's webinar event. I am your host, Sean Kozak, President and co-founder of Neurostreets Trading Academy. And I want to thank you for your attendance in day 2 of our trading summit. Yesterday we did the principles of order flow lessons. And today we're going to carry on the discussions with regards to micro and macro volume profile analysis. Now, if you didn't get a chance to join us yesterday, we did record the event and we did send it out to all the registrants. However, if you did not receive that, please let us know and we will make sure that you get that sent to you pronto. In terms of today, a couple housekeeping rules. If you have questions, please type them in the chat box. If you can't stay for the entire event, not to worry, we will send you any special offers, video recordings, as well as any details to the topics at hand. Now, I do appreciate your patience, so I will keep things on schedule. Need to cover a quick disclaimer so that we can make sure that everybody understands the risks associated with the business, and that way we can carry on. Excellent. So a couple things I want to talk about here, guys, is the no fluff, no snake oil, no BS or false hopes motto. You know, I've been around the space for a long time, and when you've been teaching traders as long as I have, or at least been in the environment as long as I have, as an educational provider and software developer, we get a lot of people that are very interested in trading, and a lot of people come and go, and a lot of people stay, and a lot of people struggle at first and then succeed, and then a lot of people fail, and then all of a sudden they get through, the magic happens, etc. And more importantly, guys, I'm here to share with you that my promise is simple, right? I run a trading room. We have a lot of traders in our environment. We've been teaching traders for a long time, and we've got a great team. But the truth of the matter is that we've had the privilege of working with thousands of traders from all over the world. And the concept is simple, right? We're here to teach you skill sets using tool sets that we use in the markets. A lot of traders will need to learn a signature trade, and then you got to get good at trade management execution, right? The goal here is that you study and progress, because everybody comes from different skill sets. Everybody comes from different environments. Some people have capital, some people don't. Some people are trading on their own. Some people are trying to get funded at a prop firm. Either way, what we're about to show you today is an extension of what a lot of traders are doing very well, and it's proven to be beneficial for a lot of people. So when, you know, people come together and they use tool sets and they use specific methods for trading, you have to decide if what we're doing here makes sense to you and you like to join what we're doing, or at least resonate with the topics at hand, right? So if you have any questions on that, please don't hesitate to shoot us an email. And if you want to get in touch with either me or any of our traders, let us know. All right, guys? So today is day 2, volume profile. How many of you guys learned something yesterday? Did anybody here learn something yesterday? Vincenzo says, day 1. Anybody here come in from yesterday's event and learn something about order flow? Excellent. Well, the goal here is to help you learn something new about volume profile. Some of you may have exposure to volume profile. Some of you might be brand new. If you leave here today with one golden nugget that can change the way you trade, then that is a big, big win, okay? And the reason I say that is that it's a process. And so I'm going to teach you some of the things that I like to talk about when it comes to volume analysis. And I'm actually going to show you some of the things that I don't really cover in our trading room, because just because we do certain things in one environment doesn't mean you can't do it in different environments. So I'm going to teach you everything that I know about volume profile in one event, right? So I'm going to turn the fire hose on here, and then you're going to probably have to watch some recordings or pause and play later, because I can assure you we're going to cover a lot of information. Micro and macro volume studies, cluster analysis, volume cluster pattern reversals, volume averages, volume divergence, understanding profile composites. And at the end of the event, if you like what we're using, the macro profiles is one way to look at it. This is using the Print Profiler. The Print Profiler studies specifically on volume profile and order flow, okay? And the difference between the macro profiles and the Print Profiler's indicators is that the Print Profiler is a volume profile and an order flow tool set, specifically on volume and order flow, okay? So we often get that question is, how is the print profiler different than the macro profile? It's very different. We're only looking at volume studies here and in a very micro and macro context, okay? So let's talk about micro volume profile. Micro volume profile is basically looking at volume profile on a very small scale. That involves looking at volume profiles on a single bar by bar basis. Every single price bar has volume inside of it. So the study of micro volume involves looking at volume profiles inside of each candle. It allows us to study the volume clusters, which is the bulk of volume in every single bar, and how the market transitions using that type of data. We've built what we call pattern recognition, which generates patterns or trading signals for those pivots. We call them the 2-bar and the 3-bar volume cluster patterns. We also have the ability to look at volume averages. So similar to a moving average, instead of using closing prices, we export the volume data, and that volume data allows us to build trend bands that look at micro volume profile analysis. And on top of that, we have a signal that looks at volume divergence, which is volume exhaustion inside of price candles, okay? So what's really neat here is that the study of micro volume involves a lot of different discussions, and we're going to break this down independently, okay? So when we talk about bar volume profile is the study of volume inside of every single candle. So similar to when you have a volume profile on an entire day or an entire price region, you have a value area high or a value area low or a point of control or a volume cluster, VWAP. You can also have that, okay, on a bar by bar basis. Now, I'm a big component of trying to keep it simple. So when you look at volume at this micro level, it can be very overwhelming to the new trader, because you have so much minuscule volume taking place that it makes very difficult, or I guess I'd say it's very difficult to ascertain which volume is relevant. And so what I've found over the years of building software and running trading rooms is I like to look at the cluster, okay? And this is really, really important, because in the previous slide, you'll see a bunch of colors, but you're going to see a black box inside of every bar. We call those clusters, and volume clusters are essentially the 3 main points of volume inside of every candle. It's the volume that is very, very large in the bars. Most often that will include the point of control. Now, what I'd like to do is I'd like to talk to you about 2 different patterns that volume cluster analysis can do for identifying shifts in sentiment. There's a 2-bar break and a 3-bar break. And the 2-bar break is very simple pivots. It's a pivot of volume. A lot of times you'll get them in random locations where you have an up bar, okay, and you have a down bar shifting volume, or you have a down bar and then an up bar shifting volume, right? So you can easily see, let me grab a cursor here. So let's just grab this here. Let me grab that cursor so we can draw on the charts. I'm going to put the slide back on here in a second, guys, so you guys can see that. Okay. So when we talk about a 2-bar break, what we're referring to is a volume shift on 2 price bars. So price needs to go up. There's volume inside of it. We call that the cluster. And then price needs to go down. And what we're doing is we're looking to see that when price goes down, is the volume going down with it? Volume will often lead sentiment in the market. And as a day trader, it's really important to be able to read that. Okay, now on the other side, price goes down. Okay, volume here in the bar, and then price goes up. volume shifts. Okay, you can see that. Okay, now the thing about a 2-bar is that it doesn't happen a lot, and it's not a huge sentiment shift. Okay, because it's just one up bar, one down bar. So what I tend to focus on is I tend to focus on the 3-bar pattern. Okay, and this is something that I cover in our trading room a lot. I took a short on gold using this logic today, and we'll show you that trade and we'll talk about it after. But the goal here is to help you understand why this is important, because day traders use small time frames to manage entry points. Can we all agree that we all need to get better at how we enter trades? I mean, yes, if that makes sense to you. That we can all get better on our entry and our exit, right? Everybody in the world needs to get better at their entry and the exit. That's the goal, right? Well, using this type of a tool or this type of market analysis will give you a better way to understand why you want to enter trades and what it's telling us, okay? Well, what I like about the 2-bar and the 3-bar is that unlike the 2-bar, the 3-bar requires 2 down bars and those or 2 up bars, okay? And in that reversal, we need to see shifting volume, because the market can easily go up and shift and the volume can stay at the highs. Volume can come down, the market can come up like that, but the volume can stay at the lows. That doesn't tell us anything about sentiment. It just tells us that volume is stuck at the lows or the highs. But when we get a pivot and we see volume shifting like that, it tells us that not only prices are transitioning, but volume is confirming that transition. Okay, if we see price come down, up, up, 3-bar pivot, volume shifts with it, it gives us an indication that the market is transitioning with volume confluence. So here's an example of the 2-bar signal. You can see price going down and then volume shifting up. The nice thing for you is that we've coded the signals. So you don't need to sit there with a magnifying glass and identify every time the market gives you a 2-bar break. Or the 3-bar, okay? Now the 3-bar is much stronger than the 2-bar because it's a bigger pivot and it's a bigger shift of sentiment. Now the key here is that you're going to have volume shifts all over the place. So similar to what we talked about with order flow, okay, the goal here is to understand, when is this data important? Because I can assure you this, you're going to have a whole lot of 3-bars and 2-bars on pivots. Volume is always transitioning. How many of you guys have ever heard me say area of interest before? It's kind of like I have it tattooed on the left hand here. Okay, a lot of times. Because an area of interest is where I am planning on thinking about getting into a trade. Can we say that resistance is an area of interest? Support is an area of interest? Okay. Supply, demand, okay. Fibs, all these different things that could create places where the market's going to turn. Value area highs, value area lows, right? All of these different ways are areas of interest. Well, if we know that, and we know that we can look to engage in business, that's why we want to turn some of these features on to be able to help us make better entries. So one of the things that we do here, I'm going to go through some of the features in this drop-down menu so you understand. I'm going to turn some things on or off so you can really see things in motion, and then we're going to go through this and we're going to work our way through here, okay? So let's just kind of narrow this down a little bit. And I'm going to go into the bar volume profile, and I'm going to start turning bar volume profile features on, okay? And you're going to find that if you look inside the bar, okay, it's a lot of colors. It makes for a really nice rainbow. Looks like, you know, a bag of M&Ms. But it doesn't really tell us anything about the information. It just has a bunch of fine colors on a chart. But what I like to do is I like to turn all the stuff off that generates headaches in my mind, because I'm here to make money, not overwhelm myself with information that's not important. It's not that the features aren't important. It's just what's the most important features is I think that's the better question. And that's the volume clusters. So if I turn the volume clusters on, you're going to see, okay, volume inside the price candles. Okay, just like that. Now, if I go into the bar volume and I turn on volume signals, okay, let's go here and see if I can find a 2-bar. I don't know if there's any 2-bars on here. Like I said, they don't happen as much. Let's try and find it. Let's turn off the 3 bars and we'll see if we have any 2-bars. 2 bars on, recalculate the profiles. There they are. So we've got some 2 bars. You can see some 2-bar volume shifts. But if I turn off the 2 bars and turn on the 3 bars, you're going to see them. You can turn them both on, recalculate the profiles, you'll have them both on. The goal here is that you don't need to have all these different signals on your charts. Okay? We just need to understand when they're important. And so I'm going to turn the 2-bar off because I personally like the 3-bar better. And I want to talk a little bit about what the pivot's telling us. Okay, so I'm going to use this example right here for this example. Okay, and we're just gonna analyze this rotation in the market, because that's really what's more important. Is let's put a little line in the sand, and let's say that is an area of interest. Okay, because there's going to be areas of interest all over the place. But the goal for this type of an event is to, why would we want to study volume, and how can you use it leaving this webinar? Okay, so let's just kind of draw a little picture in our mind. Price is coming up, and let's just write here and explain that this is a market profile value area high. Sell AOI. That's a selling area of interest where we should think about selling the market. Okay, now this could be anything. If you have any other indicators or anything you're looking at, or if you're trading our systems, that's fine. But right here, you can see prices are going up on rising volume. You notice how price flipped, and if I turn order flow on, like we talked about yesterday, okay, delta flipped there. But you notice how delta flipped, but the volume stayed at the top of the bar. That's from profit taking. That is not a reversal. So this is where we can really start to piece together order flow and volume. Yesterday we talked about order flow. If we were to rely on order flow alone in this situation, it's not a good indication of sentiment of a reversal. So when we start to think about what the volume tells us, we can say, okay, I got volume here, and I still have volume rising, but price went down. You say, well, what does that mean? It means that the market hasn't shown you that it's ready to reverse yet. And so that's what this does for us right there. You can see that price has now gone down, but also gone down on shifting volume. And the software will generate a signal, and it'll say 3B VCR. You can put 3-bar, you can put lollipops. It doesn't matter. It's just you can change the names of any signal you want. Okay, you can put any text you want there. But the goal here is for you to understand now where the sentiment is. Okay, so what I like to do is I like to ask, you always hear me coin this term, and I'm gonna put here, you're gonna hear me coin this term. It's called the bulk of volume equals the 2 bars where the most volume occurred. So in the pivot, this is the confirmation bar, but that's only one price bar. Okay. The bulk of volume, if you take a look at where there was volume here, there was volume right here, down here. Where is the bulk of volume located in this pivot? Anybody have an idea? Anybody want to chime that in the chat box or write that down here? Around 80, yeah. Around 80, 1480. Because if you look at it, it's these 2 bars where all of the volume is stuck up here, right? This bar is kind of down here by itself. So what I like to do is I like to think, okay, if I'm going to sell and I want the market to go down, and I'm going to put a sell order, the question is, where do I put the sell order? Where am I getting into the short? Well, this bar is closing down here. The premise is if it's truly going to be a reversal, and it's truly going to be a reaction where this reversal is respected, they're most likely going to come up to test where that volume shifted out of the bulk of volume. So what I like to do is I like to put my orders, okay? I like to put my orders 1 tick below that volume cluster, right there. And the reason for that is if they come up to test it, okay? If they come up to test it, that's normally where they're going to come up to test this market, okay? Now, in this situation, this volume cluster is literally inside the other one. So you could put it right there as a front running, where you know, if you really felt that you were going to miss the opportunity, you could put your order right here. Normally, I would put it right there. Okay. So I took this short today, okay? I took this short. You'll notice how it came up into that area 1 tick. That 1 tick was 1 tick below this volume cluster, okay? They came up to test it. They came up again to test it again. This is the reversal, okay? This is the retest into that volume. And if it's going to be a reversal that's going to be respected, that's where they'll drop it. Okay? That was the trade I took in the trade room today, following that premise of volume shifts. This was a value area high at a low volume node, and we had the opportunity to get in board that. Now, there's more to it than that. There's more to why we took this value area high and all of that stuff. The point of the matter is, it's the logic around the volume that gave me the reason to want to enter that way, instead of just randomly placing sell orders out of nowhere at a value area high for no random reason. We use volume shifts to be able to tell us how to enter properly. Now, let's kind of transition to a different discussion, okay, around when you can use this type of logic to benefit you. Because if you have a bunch of volume shifts all over the place, you can see That's not an edge. There's no edge to that. Okay. However, if you start putting areas in the sand and you start putting things on your chart that could be beneficial, like other areas of interest, now we're starting to add levels in which we would look to use volume to our advantage. One of those would be an average. One of those areas of interest could be volume cluster averages. And volume cluster averages are very unique, and I'll tell you why they're unique. I like the cluster as opposed to just one price level because it's an area. So what we've done with the Print Profiler software is we take a look at every single price bar that has volume. And we have a volume cluster in each bar. Okay. So instead of having a 20 period EMA, an EMA looks at the exponential moving average and it's rising off closing prices, right? An SMA is a simple moving average, but it's still looking at closing prices. What we've done is we've taken the logic that forms averages, and we said instead of basing it on closing prices, we base it off of volume profile data. So the average now is based off volume rather than just random closing prices. And the reason this is important is because volume is what the market is based off of. Closing prices are just where price closes. Okay, so let me go into the software for a second and show you an example of what this means. I'm going to turn the signals off for a second. Okay, and I'm going to go in here and we're going to basically just go and talk about averages. You'll notice here that we have the ability to change the period. No different than if you're looking at a 9-period average, a 50, a 200, whatever the case may be. We can also switch it from an EMA to an SMA. Now, the reason this is important is because exponential will be faster and less lagging, simple will be smoother and stronger, but the key here is that it's based off volume. So if I were to just put the average based off the point of control, that is an average of all the point of controls over the last 20 bars. Okay? It's a POC average. If I go in here and turn this on, that's a VWAP average based off of all the VWAPs over the last 20 bars. The cluster is an area that involves the bulk of volume across the last 20 bars. The reason I like the cluster is because it's a larger sentiment detection. It involves 3 price points on every bar, not 1. So it tends to be a lot stronger and it acts as more of an area rather than a specific price, right? Because a lot of times traders will just rely on a specific price, and if it doesn't meet that price, then they don't make a decision. Clusters give you a few different prices in areas to make decisions off of. Now, that's a 20. If I go in here and I turn on the 50, okay, like that, now you have a set of averages that can be detectors of trends, and it can be very great locations for getting into trades. Okay, now, the reason I'm saying this is because if you're somebody that likes to trend trade, you can use volume averages as a better detection when structure is aligning with it. And every time price comes into these volume averages, you can see how price respects them. Okay. Now, I want to take this a little bit further. Let me know if you're with me here. You guys with me? Give me a yes if I've got you on the same page. I'm breaking this down section by section, and then we're going to talk about how you can look to use this to your advantage. Okay. Volume averages are there to gauge averages. Bar volume profile talks about bar volume, but you can also see how it bridges on top of each other. You cannot have the volume average without the bar volume profile, right? So without the bar volume profile, you can't deliver either the cluster patterns or the averages. So you always start with micro volume profile. Joe says, not clear on how getting an area on cluster moving average. Perfect. Let's take a look at it. Let's just say you've got all these price bars, right? Right here, just in this window. You've got, we'll just say this is bar number 1, and let's just say that's bar number 20, okay? You've got an average. You've got clusters here, right? Right? There's clusters. Rather than closing prices, right? Where every other EMA is based off of closing prices, we base our averages off the volume data. Okay? So when you form an average, we're not forming the average based off price, we're forming it off of volume. Now, I know I see you guys have questions. I'll get into that after. I'm going to stay on topic. Okay? So let's take a look at another concept called volume divergence. So volume divergence, just like momentum divergence, okay, is ultimately when price and volume shift away from each other. What we've done is we've created a diamond signal that it signals VDS or VDL. And what these signals are is a signal of when price and volume diverge from each other. A lot of times this is when we get exhaustion. A lot of times you'll see this happen also on trap trader signals, when we have volume shifting divergence as well as order flow exhaustion. These can be really, really great cues in alignment with pattern shifts on clusters as well as areas of interest for volume exhaustions. So let's kind of talk about that. Take a look. Let's give you another example here. Take a look here. You've got resistance and support in a small little range. And I'm just using this for an example. The top of that little oscillation of this range, okay? So you've got a little consolidation period. You can notice that as price gets down to the bottom, look what happens with price and volume down here. Volume gets stuck at the lows, price reverses to the highs. When price gets up to the top, watch what happens here. Price comes in, drops, volume exhaustion, price comes back up, volume exhaustion on the retest. What's happening here is that as prices went higher, volume tried to break higher and then price reversed. Volume stays at the highs. And normally what we want to do is we want to see these volume exhaustion patterns at the right locations. You'll notice that there's a common confluence of a lot of the different stuff we talk about. Whenever we see things, it has to do with areas of interest. So if I'm just looking at this environment, okay, we can see that up here, sellers, down here, buyers. So I want to see volume divergence shorts at the highs. I want to see volume divergence long at the lows. Having them out of context doesn't make any sense. It's kind of no different than I would want to see trap trader shorts for order flow up here, trap trader longs for order flow down here. And this is really about understanding how to use specific indicators for specific reasons. If you just rely on every signal that comes into the market, it's about putting them into context, okay? Now, if we take a look at these signals at the top here, look what happens at the high, volume divergence at the top, volume divergence at the top. Volume gets stuck at the highs. What about down here? It's kind of like a bat flying around in the daytime. Doesn't make sense. What about this volume divergence at the long? Doesn't make sense. What about this volume divergence up here at the highs? Doesn't make sense. And this is really, really important, because if you have the ability to see where buyers and sellers should be on a chart, you want to be paying attention to the right signals in the right locations. What about a trend? As it's getting to the highs. Makes sense to be paying attention to stuff like this on the trend as we get to the highs. That to me makes more sense. It's about putting things into context, right? So let's put the average on. Price is above that average. Every time we pulled back to that average, what happened? Volume exhaustion. Prices retraced. We exhausted at the lows. Market rallies up. What about this volume exhaustion way up here? Does anybody want to buy that up here? Depends on who you are. The question we have in our trading room is would that be at an area of interest? This is an area of interest to us. We don't chase anything at the highs. This would be something that would not make sense for us to even talk about. Right? And the lesson for today is to take every little bit of every little tool that is built into this and to teach you when you would want to use something like this. When would you want to use volume divergence, right? Well, TJ, I already explained that. If I add the average in here, watch the VWAP. It's in the middle. The VWAP average is in the middle, right? And this is the VWAP over the last 20 bars. It's not the VWAP for the entire day. Okay? It's more responsive, and you can control that. I could put the point of control. It's going to be in the middle. The VWAP in the middle. The cluster involves all of it. There's a reason why I teach the cluster as opposed to just one single price point. No, it's all good, brother. That's why we're here. Joe, it's the high and low point of every cluster. It's the high and low of every cluster. Yep. So let's talk a little bit about putting things into context, because what I've now said to you is you're supposed to know exactly where the highs and lows are all the time. And that puts a lot of pressure on you as a trader. If I say, well, yeah, just pay attention to the long signals near the lows and the high signals near the highs, I'm assuming that you understand what that means. I'm assuming that you know, okay, I know where expensive price levels are and I know where cheap price levels are, but most traders don't. Most traders don't understand where value is in the market or where, you know, retail is in the market. And what's really interesting, okay, is that that's where volume profile comes in. Macro volume profile is where we get to understand the daily auction, okay? The auction can be broken down into a daily auction. It can be broken down into individual auctions, split auctions, time interval auctions. So we're going to be talking about profile composites, profile intervals, developing profiles, and then manual profiles. And the reason this is important is because now all of the micro volume that I've just discussed can be applied in the right locations, knowing the bigger picture auction. So let's start by talking about profile composites. A volume composite is the word for the auction. It's a composite is the name of, you know, the histogram on the left-hand side of this environment. And a volume profile is made up of a value area high, a value area low, a point of control, and a VWAP. And that is terms that are describing the bell-shaped curve. So when we have a bell-shaped curve, it's a statistical way of measuring standard deviation. And inside of a standard deviation, we measure volume and price. There's a value area high, there's a value area low, there's a point of control, there's a VWAP. 70% of all volume exchanges between the value area high and the value area low. So this is telling me that the value area high is here, the value area low is here. 70% of the daily volume happened in this window. The point of control is the single most place of time. The VWAP is normally said to be a benchmark of value. When we're above the VWAP, we're trading to the upside. When we're below, we're trading to the downside. That is very macro in nature, and it's only based off of a one-day environment. So if I look at today's profile on this market, let's turn off the bar signals now. Okay. And let's go in here and just turn on the volume composite. Profile composites on, I can turn them on. I can turn them to histogram shapes. I can draw them above price or below price. I can change current profile on or off, historicals on or off. I can change the way we want to look at them, very responsive. Historicals off, volume numbers on or off, levels, labels, etc. It's all about being able to customize how you want to read the graphics. It's one of the reasons why we build our tools the way we do, is so that you have complete user-friendly user interface. Now, that being said, let's just take a look at this. This is the current composite. So what this means is that's the value area high now. That's the value area low now. That's the point of control and the VWAP now at current price. So if I were to say self, what's expensive? Anything above the value area high is considered expensive. Anything below the value area low is considered cheap. Now, so let's just type that word now down here. That's what this is referring to. But what about at 7 o'clock this morning? Right? That may not have been where the value area high was. That may not have been where the value area low was. Right? So we have to understand that volume is a dynamic aspect of value. And what's cheap now may not have been cheap this morning, and vice versa. So one of the things that I've done is we've created the ability, okay, to look at what we call developing profiles. You can turn on developing profiles to see how the value areas shifted, how the volume profile changed, the point of control changed, the VWAPs changed, where all of that auction changed during the life of the market. And this is super, super powerful for back testing, because now you can go back and you can see where the value area lows and the highs and everything was originally. So let's go back and just compare the developing profile to where the value area highs are changing. Now, you don't need to trade with this all the time because it's not necessary. But if I take a look at where this is now, and I'm going to go fill area off, extremes off, I can see that that gray section is the value area. So you can take a look at how the value area has changed throughout the day. You can see here that the value area highs were up here earlier. They were up here as well. You can see where the value area lows were down here, and then they moved up here, and then they transitioned back down here a little bit. You can see how the VWAP transitioned throughout the day and stayed here like that. Okay. But you can see how these are fixed levels right now, because this is now versus the developing aspect of volume. So the reason this is important is because if I was looking at expensive price levels earlier today, at the open of the morning session at 6:30, let's just say I'm on Mountain Standard Time, so 6:30 is the market open for me right here. I can tell you right now that at the time this morning, we were trading well below the value low for the day. Okay, so if I were to look at expensive price levels off the daily auction, that's way up here. Or anything above the VWAP would be considered, you know, getting expensive, or the directional shift is changing. But why is this important? Because when you start looking at volume divergence or the cluster signals, you got to put things into context. Where are the areas of interest? Right? Where are things expected to be important? Look at this signal right here. That signal right here, that signal that I took today came off the VWAP and the point of control. It was a rejection point off the daily composite. Now, that was a little different for our trade room today, but if you're looking at the Print Profiler software, this was a rejection of volume off the VWAP before they came back down to test the value low and lift it back up. So you can see that this was at a key area of interest for the day. This was a test of the daily point of control at that time, and it was a test of the VWAP rejection. Right? So putting this trade signal in here, putting this short, okay, versus this long, you have to ask yourself, have we proven ourselves above the VWAP today? No, we didn't. We have not yet confirmed that buyers want to control this market yet. So coming into these areas, I'd be looking at resistance. The 3-bar makes a lot more sense than the volume divergence long at the bottom. And that's how you can start putting things together with context of signals, is that just because you've got long signals and short signals, you need to know it's all about location. Location teaches you everything because it's all about relevance. So many people want the signal to make the decision for them. The signal gives you the reason to get in for execution. You must learn that it's about identifying how to read the market to put the signal to context. Let's turn off the developing profile. Okay, let's turn off the signals again. I want to talk a little bit about composites, intervals. How many of you guys in here see me use the macro profile software? Okay, the macro profiles does automated splitting. It's a different product. It's the tool that we use in the trading room. We use the Print Profiler in the trading room. We just don't have the volume profiles turned on, right? So anybody that's ever been in our trade room, you'll notice that we use the Print Profiler for order flow and volume and cluster signals, etc. What many of you don't know is that it also has the composite intervals built into it. Now, the difference between this and, say, the macro profiles composites is this, you can control it. So if you want to set the intervals that a profile changes every hour or every 3 hours or every 180 minutes or 120 minutes or every 15 minutes, you can set the profiles to be dynamic to anything that you choose to. So if I go into the software and I go in and I take a look at the composite settings, right now, if I turn the profile composite on, it's based off the day because I have the settings set to day. If I turn the composites to time, it opens up the ability for me to now start the profiles, okay, right here. And that's just because the market just opened here, so we're going to give it some time here. Set this to time. And I set these windows to every start 30 minutes, interval 60 minutes. What we're going to do here is we can then set the intervals to be able to transition at every given time. So let's go in here and recalculate the profiles. Give me a second here. we're going to go into the settings and we're going to start intervals. Maybe we got a bug. 30-minute start time, 60-minute intervals. Let's do this to 120. We just updated to Ninja version 20. So version 20. And with that, sometimes we have to find things and fix it. What normally is going to happen is you're going to see profiles shifting over different intervals. So let me go back here and share this with you. You're going to see volume shifts like this over 30-minute windows, 60-minute windows, hourly, whatever you choose, okay? And in order for us to be able to set that, what'll happen is you can choose the start time of those profile shifts, or you can choose the end time and also the interval settings. And thank you for your patience in me not being able to display that because it's a small little bug. We just moved from Ninja version 19 to version 20, and these things pop up sometimes, so we fix it on the fly. So we'll get that sorted and we'll get that cleared away. Let's talk about the settings. Let's put this back to day. There it is. So you can see the day came back, no issue, right? So it's just an interval. I want to talk a little bit about manual profiles. Yeah, exactly, and that stuff happens. And when you deal with this type of Ferrari, sometimes and NinjaTrader 8 has a lot of updates too, right? So whenever these things happen, we never really know it's there until it happens. So I want to talk a little bit about your flexibility. We've created what we call a manual profile. And I'm going to go back in and we're going to show you what that looks like. Manual profiles allow us to be able to control where we draw the profiles. So let's say you're doing analysis on your own and you want to study pivots, or you want to study a swing in the market, or you want to study the ability for us to look at certain areas where you're trading at. We've created the opportunity for you to be able to come in and draw profiles. So let's just say I wanted to draw a profile from here to here. You can do that. Okay, I'm going to go in here. Give me 1 second here, like that, and we can adjust it. We can basically control that. Okay, we can move things around. You can see that all the levels are here. Let's say I want to go into draw mode, and I want to draw several profiles. Draw multiple profiles. Let's say I want to study this. I want to study that. I want to study this. I want to study this. You have the ability to draw multiple profiles to assess the volume in those locations. So you have complete control over studying micro volume at different areas, but putting an entire profile around that context. Okay? Drawing tools, remove all drawing tools, and yes. And what's nice is it preloads the data. So as soon as you draw one, you can then control it. Look at what happens when you move it. You get complete flexibility of that profile. It's very, very responsive. Okay. So to kind of bring this all home, the point of this is to be able to have not only order flow at your advantage, okay, but also bring together the volume studies so that you don't need to use a lot of different indicators to study order flow and volume. The purpose for the Print Profiler was to integrate essentially all of the order flow solutions that we need, all of the volume profile studies that we need, and essentially basically look at when we want to use them. Can the values be extended in that state? Yes, they can, Ness. Yes, they can. Yeah, you can extend those levels and you can do all of that. Yeah. And you can attach it to current bar as well. And it is very cool. Yes, Ness, it's very, very cool. And so the goal here is to kind of give you a tool set that it's like a Swiss Army knife. You don't need anything more when studying order flow and volume in micro or macro context. And depending on how you choose to use order flow or volume, you have the ability for you to control all of it. Okay. So did you guys learn anything from that? Because we can look at other markets or we can do a lot of different things, but the point of the matter is to give you a breakdown of how it can be used, what it's designed for, why you would want to look at certain types of information like this, and all of the different features that incorporate order flow and volume profile over a 2-day window, right? How you choose to use some of this stuff is completely up to you. How we teach it is relevant to some of the things that we do in our trading room, but many traders trade differently, right? Many traders will trade your own way, and many traders will use different ways of looking at market context. I can assure you this, that when we built the Print Profiler, it was designed with one goal in mind: to be able to do everything that we could possibly need with order flow and volume on a micro and a macro scale without having to have multiple indicators doing multiple things. Okay. What I want to do is I want to show you, when you come to our website and you go in and you own the software, okay, you're going to have areas to install it. If I go in here to the Print Profiler, okay, down here, all of the licensing instructions, the usage and settings videos, the user manuals, okay, everything that is in here is basically designed to teach you everything on top of everything that we've already discussed. The user manual and all the extra training in here goes with it, right? So the goal here is to make sure that you understand that it's not just one webinar to teach you this stuff. Everything's broken down into context. If you're interested in using something like this, order flow, volume profile, it's going to take a couple things on your end. You're going to need to learn it. You're going to need to learn how to apply it. User manuals, installation instructions, training videos, all of that can be done. We can help you install it. And the big thing is that we're going to give you a discount on this stuff if you're interested in using it. I'm going to put a link in the chat box, okay? Because it's going to take a bit of time for you to understand it, but it's very easy to learn because we built it in a way that it's very simple to learn each of the drop downs and all of the different functionalities. Why don't I open it up to some questions for you guys? So if you guys have any questions in here, I'll go up here and I'll just address some of them here. It says, can the order flow indicator inform when absorption event is occurring, iceberg events? We don't have iceberg built into it at this time. We've discussed looking at absorption and all of that stuff in the next revisions to different concepts. Ness, yeah. Okay. I think I just answered that, Ness, yeah. Yeah, it doesn't currently detect iceberg orders at this time. And it does not look at absorption other than the value areas, or sorry, the order flow in the bars. Okay. Yeah, low volume nodes still your huckleberry. Yeah, low volume nodes are quite important. LVNs are very, very important. Rejection points are key. The big thing for me is volume shift reversals. In the trade room, I've been trading a lot of them very well. Very, very good for confirmation. Did anybody in here pick something up that they learned valuable in here? Did you learn something new from the event? That's the question. Good. And that's the point, right? Learning how to trade is important, but learning why you're using certain things is even more critical. When we use these types of tools, we have to use them for a reason and put things into context. Yeah, use of the volume clusters and the volume cluster averages is important. Lots to learn, Don says, yeah. The volume cluster patterns are really critical, right? Volume clusters are very critical. I trade with a lot of them in the trade room. We've recently made a shift. Yes, you can, but volume clusters are very, very small, right? You got to remember that you're looking at 3 price points, Ness. So if you're looking at that type of micro volume, It's most likely only meant for day trading timeframes. That's where you'd look at the averages instead, or the macro volume intervals. Now, if you're in my trading room and you come in tomorrow, you're going to see me talk about volume cluster analysis on a very heavy basis. We use it. It's our entry patterns. It's why we get into trades. Right? It's used as one of our confirmation entries for our strategies. Yeah. Excellent. Well, I want to thank you guys for being here. I want to thank you guys for joining me. The last 2 days have been very great in terms of education and going over context and discussing the Print Profiler software in detail. If you have any questions moving forward, or you'd like a recap of any of this discussions, what I'm going to do is I'm going to put a poll in here, okay? And if you would like, okay, to have somebody do a one-on-one demo with you, okay, and you would like for someone to go over your markets, you want a specific breakdown of order flow or volume, okay, please just put it in the chat, in the poll right now. Just type yes, no, maybe so, because what we can do is we can schedule a demo and we can go over those demos with you, and we can look at the markets, and we can go over your time frames, your bar types. That's the whole point of a focused demo, and we can get your questions answered specifically, okay, for you. And the reason we ask this poll is so that we can get in touch with you and we can ultimately, really answer your questions, right? We are giving you a discount on the software, so the demo would definitely help go a long way, and Jeff will be more than happy to get on board with you. Chuck wants to know, yeah, and also please note this, that we're going to be closed for the next 2 weeks, guys. So our company's shutting down for holidays, okay? So if you're going to want to do this, you're going to need to jump on board now, because we're going to be in the downtime, and it's a perfect time to learn this stuff over the holiday break if you have spare time for learning and outside of that, right? Getting ready for the next year. Okay. So thank you guys for your attendance. Thank you for showing up and putting some effort into learning. The team over here at NSTA thanks you for being here, and we look forward to serving you guys later in the future. We'll see you bright and early tomorrow for another trade room for those of you that are members of our community, and also those of you that are on guest passes. And yeah, hopefully you guys enjoyed the event. We'll talk soon, and have a fantastic evening. Take care, guys.